Hi, this is Rob from the Lazy Trader. We're just going to take a quick look at Euro Swiss now as it approaches the 1 spot 200 level, which is a level which the Swiss National Bank, the SNB, have pledged to defend. After all, the euro has been decreasing in value slowly but surely since 2013. It's been making lower highs and lower lows in a rather messy, jagged, choppy way. But for all intents and purposes, the fact that euro is weakening against the Swiss franc is making the Swiss franc stronger, of course, and certainly as a trading partner, Switzerland is going to be less competitive in terms of exports, and certainly things to the Europeans will be more expensive if priced in Swiss francs. So the Swiss National Bank do have influence and buying power, and when they have said that they're going to defend a level, then they certainly are going to be the biggest player in the market who've got the biggest clout in making moves. So when they say they're going to defend a level, then we certainly can pay attention to this as a potential trade with high probability. Not only is it a round psychological number, it's a level which was previously played before, all the way back in 2012, and also aside from what central banks say, the Swiss National Bank in this case, of course they've said that they're going to buy and weaken the euro against the Swiss franc for the sake of Switzerland's exports against the euro, and certainly to make it more competitive in Europe. But aside from what the central banks say, then we can really have a look at seeing what other reasons we have to potentially buy this. And one other reason is we've got the completion of an ABCD pattern here, which coincides very neatly with the level 1 spot 200, where we've got A to B, this length here, equaling C to D here. Furthermore, we take Fibonacci retracement, it comes up to the 0.618, and if we do a Fibonacci extension, it extends down to the 1.618. So that overlaps very nicely with the level, which is essentially a buy zone. We've got a confluence of reasons as to why the 1 spot 200 is going to be potentially a very decent buy level. Not only is it defended by a central bank, and certainly central banks with the powers they have are certainly the most powerful people in the market in terms of creating moves. We want to be on the right side of central banks, not trading against them. They're the ones that create the moves. As traders, we're the ones that want to essentially take advantage of the direction they send the markets in. And when they say they're going to defend a level, then we need to prick our ears up and pay attention. But apart from the SNB's pledge to defending this level, we've also got the fact that it's a level which is played before, all the way back in 2012, and we've also got the completion of an ABCD pattern like so. So a confluence of reasons why this could potentially be a long opportunity in this zone here. So some of the more aggressive traders would simply have their orders to buy on or above the level, just in case price doesn't come down to the round number. And what they'll do is they'll simply wait to be filled and wait for the move upwards. If the market does continue downwards and the SNB doesn't pledge to defend the level anymore, they change their mind or they decide not to, then of course as traders we appreciate that nothing is guaranteed in the markets, and certainly more aggressive traders, it's likely that they'll have the trade invalidated and they'll move in accordance with that. So they'll cancel the trade or get out of the trade at a small loss if there's a close below this level and the level is thus negated. For those more conservative traders out there, then what they'll do is they'll simply wait for more clues at this level, and for example an activator bar like a bullish pin bar reversal with a tail below the level with an open and close above it, that would be a confirmation for a more conservative trader, or a double inside bar or an engulfing bar price action base setup for the more conservative trader, because the requirement to have a price action base setup on the level would essentially be an extra filter to qualify the trade. Of course, it might not happen. You might just get a surge of buyers including the central bank, coming into the market, creating a spike on the level or just above the level, that would mean that the more aggressive traders will be entered into the market, whereas the more conservative traders will not. Conversely, if there's just a huge move downwards and the market just falls, the floor falls away and there's a huge spike downwards below the level, then the conservative traders won't be in the position, but the aggressive traders will be. Of course, there's pros and cons to each profile of trader, and certainly whether you're conservative or aggressive in your trading approach, it's a very personal thing. Certainly there are pros and cons to each one. So that's what we're looking at in terms of Euro-Swiss. Happy trading.
What do you think of that? Trading does not have to be difficult or time-consuming. In fact, all you need to become a profitable lazy trader is a single strategy which you can trade for only minutes a day. Visit thelazytrader.com and download for free 5 rapid ways to become highly profitable at Forex trading and your trade secret video pack, so that you can copy the winning elite and rapidly accelerate your long-term success in financial markets trading. Trade profitably from as little as minutes a day and beat the banks and brokers at their own game. This is available for a limited time, so download it today. www.thelazytrader.com. It's free, fun, and most importantly, it will help you. Visit thelazytrader.com.